Hello, team. We are in day 3 of January. Wow, how time flies. No, not really, but it feels like a month already. Just 3 days. It's also Bitcoin's 14th birthday. Just 3 days. It's also What a roller coaster. So welcome to 35 Nuggets of Information. And let's start with our usual edutainment disclaimer. Never financial advice. So over the past 7 days, it's remarkable how, we open up today and Tesla's doing really bad. But hey, we kind of talked about that yesterday in the Q&A. But if we look at crypto over the last 7 days, it's quite a bit of green. This is everything divided by Bitcoin. BNB is up, Sol's dark green, Ethereum is up, etc., etc. So not too bad. Polkadot is up. A couple of red names there I won't mention, but dark red, Doge, not good. And a week ago, it's been an interesting week because we had a huge V-shape piece of action as well. We'll talk more about that in a minute. But if we look at crypto over the last 7 days based against the US dollar, tells a little bit of a different story. The only green spots are Binance, Solana, and I can't even read that. Tron is there. Quite impressive. Litecoin, some of the oldies and some of the new ones as well. But again, nothing too radical, just down a little 1.57%. Now, let's look at the stock market before we jump into the good, the bad, and the ugly. Equities themselves, not bad, except you have Apple going under $2 trillion in market for the first time in years, I think since November 2000 or something. Tesla had a big hit today based on them not meeting deliveries. Wall Street was very disappointed. Good evening, Marvin. And everything else is kind of not bad so far over the last 7 days. In fact, the market did start off with a little bit of fear today, down because of recession. We'll also talk more about that as well. Let's talk about the good news first. Lots of good news. We always start with the predominance of news, and today it's good, believe it or not. So happy birthday, Bitcoin. 14 today. Woohoo. It's amazing. 14 years is a very short amount of time in the lifespan of assets and markets, but this one has come a long way over a short window of time, considering there is no CEO, there is no marketing department, etc. It's just hardness, and it just block, TikTok, whatever, every 10 minutes just chugs along like a big old train. So what is the history? So 3rd of January 2009, Bitcoin network was created when Nakamoto mined the starting block of the chain, known as the Genesis block, gave birth to it. And written on it, in the Coinbase of this block, is the Times 03, January 2009. That is the Financial Times in the UK. Chancellor on the brink of second bailout for banks. This also was after a very rocky year-end in 2008. And now what is commonly called as the GFC, or Global Financial Crisis. This is the reason for Bitcoin. This is the reason I am here doing videos, is to try and share as much information as possible, because we need protection from this constant money printing that happens. That is why I like the hardness of Bitcoin, and it's the hardest asset that I can find. But we also talk about other stuff too, which is kind of interesting as well. Let's look at the Bitcoin chart of the day. Zito, thank you, sir. This one is kind of a beautiful rainbow chart put together by Wicked Smart Bitcoin on Twitter. Now, if you look at, this is the development of the amount of Bitcoin that's out there over time, over supply. You can see the purple stuff. This is coins held and not moved for more than 10 years. Obviously, that's growing. That includes things like Satoshi's 1.04 million Bitcoin that many believe, including myself, it'll never be touched. Then you look at the breakdown of cohorts. You've got long-term holders now hold 5.2 million Bitcoin. These are people that have held more than 5 years. And you can see the different color codes there. Then you have your medium-term holders. That includes people like myself. Go back to, the original 2017, 2018 little position, and then 2020 bigger position. And hodl, very important to keep those kind of hard assets, like having a little antique gold coin or something, sock it away. And then you have your short-term people, less than 1 year. Some people define short-term as less than 155 days, but in this particular chart, it's less than 1 year. And that is the makeup of all of these different beautiful colors But the point is, people are hodling for longer. Also, it's becoming more scarce. The percentage of Bitcoin mined is 91.7%. And there we are. So let's go. Network age is 5,111 days old, etc. Or sorry, 19.25 million Bitcoin have been mined. Not much left over the next 110 years, when the last Bitcoin will be mined in the year 2140. None of us will be around to see that, but hopefully our children's children will. So let's talk about where we are in the season. We know it's holiday season, Christmas season, but it's also Bitcoin season. Based on the yearly chart, we are square in Bitcoin season for the first time since May 2022. So woohoo for that. That means Bitcoin is outperforming the top 50 altcoins that are out there. Again, it's a good way to kick off the new year. I do believe certain altcoins have been hit pretty hard over recent times, but some are rebounding very, very fast. Now let's talk about, this is a new segment. I call it the top gainers, top trending, and most search assets, because weird stuff is happening out there in the marketplace with some big changes, big developments. Things that were called dead are definitely not dead, etc. But if you look at the top crypto gainer assets on the top left corner, you'll see Kava is up there. And depending on the time of day that this was searched, if this was run today, right now, Solana would be number one because it's made over 18% return today. Top trending crypto assets, Solana is trending. Bitcoin is number two. Good to see Bitcoin on there. Matic, number five. Big fan of Polygon Matic here on the show as well. And then the most searched assets, what the hell is, I won't even pronounce it, Rich Quack. And then Bonk is number two. Bitcoin number three, Solana number five. So that's kind of what the world is doing, how assets are performing, what's trending, and what's being looked for. It's an interesting perspective because typically when these things run hot, there is movement with the exception of the big heavyweight that is Bitcoin. So it takes a lot to move Bitcoin. Now, there are some new predictions that are out there today in an article from Kieran Lyons. And it was Erik Voorhees, who is from Shapeshift. He expects Bitcoin to reach $40,000 by June 2023, which is a lot of hopium. I think he'd be lucky to break 30,000 myself, if that. Tim Draper stood by his $250,000 prediction, but he moved out to April 2024. Coincidentally, he is kind of clever, Tim Draper picked the time of the Bitcoin halving. And I do believe there will be a run-up for Bitcoin ahead of that halving. How high we go remains to be seen. And then you have Mike McGlone, 2025 prediction of $100,000. And you've got, I think it's a British bank, Standard and Chartered. They predict in 2023 a $5,000 Bitcoin. So if you average all these together, the number is pretty good. I won't even mention it. It'll sound extremely bullish, but it's north of 82K. Anywho, with that, thanks Standard & Chartered for that vote of confidence of 5,000 Bitcoin. I wonder whose side they are on. Maybe they are sponsored by the WEF or something. Because as we go forward, as Bitcoin builds steam, it's going to grow more enemies. And that's just the nature of the beast. So let's look at Bitcoin open interest for futures. This shows a market decline in the percent of crypto margin future open interest for Bitcoin. And the decline of open interest has really come down from July 2021 into 2022. Portrayed a recovery on the risk on narrative through 2022. However, starting at almost the lowest point in 2 years, risk is coming off the table fast as we begin 2023. So it's a good sign, bad sign. Again, the less margin stuff, the better out there in the crypto space. Let's look at one thing we spoke about a lot is the correlation between Bitcoin and tech stocks, Nasdaq. This is a chart I like to pull up on occasion. We broke to a negative correlation coefficient of minus 0.2. So the top line is the Nasdaq performance over the last 90 days. The bottom pink is Bitcoin. Obviously, that big dip in Bitcoin was the FTX kick in the teeth. And here we are. That was November 8th, 9th, I think. But the negative correlation here is a relationship between two variables in which an increase in one variable is associated with a decrease in the other. That means they are not correlated, which is something we've been looking for a long time. So let's see if this continues. But one day it will break away. It'll be a class of its own, like a silver or a gold or a commodity as we go forward. In fact, US government classes Bitcoin as a commodity. So let's talk about Bitcoin Binance for a second. Binance is alive and well. This is the performance from Arcane over the month of December. You can see a couple of things like Bitcoin is down 3% over that last month. Large caps are down 8%. Mid caps are down 13%. And small caps are down 18%. Hence, Bitcoin season, when the mid caps and the small caps and even some of the large caps fall faster than Bitcoin, it becomes Bitcoin season as we go forward. The title on that slide is wrong, but that's my bad. We'll come back to Binance in a little bit. So let's talk about some other good news, believe it or not, on the macro side. Global supply chain stress is easing, and this is a key measure from the Federal Reserve Bank of New York and Bloomberg Magazine, the New York Fed Index of Supply Chain Stress. And we are nearly back to normal, which is good. But remember, if there is some other... We don't think so, but heaven forbid something could go wrong, an escalation of war, more C-19 shutdowns, etc. We don't know. And another good news, despite the crazy weakness of Tesla, this came out. And this is the product roadmap from Tesla. And they are going to announce on March 1st, 2023 at Investor Day, they're going to talk what they call the Generation 3 platform. And this is a long-awaited talk. It may dovetail into Elon Musk's master plan part 3. But the whole idea of this new car is production will cost half. They'll use half the factory floor of what it currently uses. The new platform will be similar to kind of the Model 3 or Y, but it'll be a new generation vehicle that will be produced in quantities that will surpass the entire production of all production lines of Tesla today. That is staggering. We're talking, by the time this thing launches, comes about, it'll be doing over 2 million vehicles a year, they believe, in terms of production. And again, Tesla double bottom today at that 106 level, which is a good sign. It didn't breach that. So I think after seeing double bottoms like we did today, it's not guaranteeing anything. With all the FUD coming out on TV, you'd believe it's going to zero. I don't believe that, because the amount of good things that are happening to this company in 2023 are outstanding. And every other car company must be terrified to death to think about this. They already can't match Tesla on speed of production, margins, etc., nor the technology. And now Tesla are going to half all of their metrics that they do, including the price of this new car, which could be a $20,000, $25,000 vehicle with all the bells and whistles that come along with the Tesla. And they say they'll be doing 1.5 to 2 million a year. That is staggering. And that's something to be excited for, in my opinion. And I am patient. So let's switch gears. We'll talk about some of the bad news right now. A little bit of bad news. First of all, and depending on what page you are on, this is the Ethereum versus Bitcoin transactions for 2022. So you can see here the Ethereum transactions just broke over 400 million. Bitcoin transactions about 95 million. So you can see it's a 4.4x more transactions are conducted on the Ethereum blockchain. So we know we've had a very dull, quiet year, particularly the month of December for Bitcoin. It was like flatlining, both in terms of volatility and activity and transactions. But then again, the transactions that are sent on Bitcoin are a lot larger. But again, Ethereum is more widely used. We'll talk more about Ethereum right now. So it's not all bad for Bitcoin. Bitcoin's a different type of thing. It's not necessarily a transaction engine or a payment processor. It's a store of value for now. The payment processing soon, though, many believe will come soon. So Ethereum Realized Cap is now at a 15-month low. I've explained many times what that is, but that is a big, staggering number out there that, again, for this level of people to be here at this level is shocking, and many did not see it happening, particularly at this stage of the game. But also many construe that this could be a bottom sign. In addition, Ethereum fees are on the rise again. This is the average mean fee paid on the hourly chart, 7-day moving average. And the fact that even after the move to proof of stake, etc., the fees are still going up is reflected in how much the chain is being used, because we're seeing a lot more usage happening now on things like Polygon and other chains because fees are creeping up. And people will always very quickly gravitate to the best, cheapest, fastest solution out there. So let's see how the daily active users for Ethereum are comparing. You can see Ethereum is down about 282 on the 1st of January 2023. Matic 176, Cardano 64, Near 36, Avalanche 33, Cosmos 12, and Aptos 9.5. And remember, what we have learned is we need to be able to trust these daily active address numbers. And the question is, can we trust all chains? We do hope so. But some of the sources that I used to verify these numbers were shut down since January 1st. And I'm not sure why that is the case. I won't mention the names that are shut down from their old explorers that used to be publicly available, but now they no longer work. And you can see here, Solana, the chain that many say is dead, is doing more than twice the daily active users on Polygon. And in fact, if you add Polygon and Ethereum together, well, those two together do beat Solana, but we'll see how much longer. And a lot of people say, oh, well, the spike in Solana is because of some Bonk coin. Well, I analyzed that question. So there's a new meme coin running on the Solana blockchain, and it's gone bonkers, and it's causing a lot of activity. But only 10,000 users, daily active users, are on Bonk, so you cannot attribute all of the growth in daily active users in January 2023 to Bonkers coin, despite the fact the chain is going bonkers. And the world is bonkers to play with meme coins, but it shows you our degen audience is alive and well, going out there and forming into stuff. Now, switch gears, we're going to talk about the outlook for 2023. And you know we love sloths on the channel, and that's why this beautiful picture is here. So this is a quick mind map I threw together of 2023 in a nutshell. I did cover kind of my outlook and predictions for 2023, but these are the things that we believe are going to happen. Number one, recession is going to hit. Number two, it'll probably be a hard landing. It's very difficult to land that balloon without breaking something. Europe and North America will get hit, and probably some other countries, parts of Latin America, etc. And there is a cost of living crisis for many. When I look at the inflation numbers out of the UK and other parts of the world, it's very distressing. So hopefully everybody gets through winter okay, and the winter is not that cold. Also, in a little bit of bullish news in this whole 2023 outlook, Deutsche Bank believe the S&P 500 will rise to 4,500 in the first half. That would be a big move from where we are now at around 3,800. UBS Group expect US 10-year Treasury yields to drop as low as 2.65%. That's another piece of very, very good news. And crypto expectations are in the gutter. Nobody expects anything to happen in 2023. Real estate is toast, not only in the US, but many other markets around the world. And COVID is a distant memory. I can now say the word without being pulled off the air. So that's the kind of lay of the land. Now let's talk about recession, because this is important. It is going to impact everybody. So first of all, banks are tightening. A big thank you as well to Sanjay for sharing this with me. This typically forebodes a recession. So big banks are all predicting an economic downturn. More than, I think, 2/3 of economists at 23 large banks that do business directly with the Federal Reserve are betting the US will have a recession in 2023. Two of them are predicting a recession a little later in 2024. And that's why we're going to talk about recession timing now. Is it going to hit in 2023? And if so, when? Or 2024? And then the first group, known as primary dealers, they're like trading firms like Barclays, Bank of America, TD Securities, UBS. They all see a lot of red flags. Americans are spending less. People across Europe are spending less. Housing market is in the toilet. And banks are tightening their lending standards, which also slows things further. But the thing is, I think it's too late to tighten lending standards. I've been talking about delinquency crisis coming for the last 6 months. And, you know, you look at car loans and credit card debt and all that stuff, it's pretty clear it's going to hit, especially as the Fed continues to increase rates as they go forward. So hopefully they'll take their foot off the gas real soon. Now let's talk about recession and when it's going to hit. Now this is great work from Econometrics. And here is some history, so I didn't have to dig it up. But it's basically recession lead time from the first YC, which is yield curve inversion. Okay, we've talked about the yield curve a million times here. But the things that really dig into this data, it looks back at all of the different recessions in history and how long it was before the recession was recorded after the first inverted yield curve hit. And the question is, what does this mean? Now, some of the recessions with very short windows was kind of 1979, then the C19 recession. That was kind of a blip. I wouldn't really count that one too much. 1981, early 2000s, 1980s, 90s, Great Recession, 69 to 1970. You can see from this, there's a lot of recessions, and they happen with great regularity. The question is, how deep do they go, and how long does it take to pull out? So let's look at this estimate. And I took this great chart from Econometrics and modified it slightly. But on average, you can expect a recession to follow. Typically, it depends, but up to 18 months after the first sign of an inversion. And the longest you've ever had to wait is 51 months, or an outrageous 4 years and 3 months. So the normal range is more like 8 months to 2 years based on the historical data that you expect to see a recession. But per this, I think it'll hit sometime between March 2023 and July 2023, considering when we had the first yield curve inversion, which was last year. So with that, everybody, we are going to hit something before summer this year as we go forward. Now, there are certain people in the world that believe everything is just rosy and fine. This is the IMF, the International Monetary Fund, and they believe GDP growth around the world will just be fine. Plug along around 3%, and nothing to see here, folks. Move along. But we know these government agencies typically are very clueless. In addition, this was a piece I covered yesterday. I was asked a question about the top asset performance. Gold, Bitcoin, bonds, etc. But I did not cover silver. And this I thought was worth sharing. Here you can see the whole range from the Nasdaq being the worst performing asset. This is from ZeroHedge. On the far right, nickel, second worst, S&P 500 third, and EU sovereign debt fourth. But if you go all the way to the left, guess what the winner was? Silver. Silver up 8%. It's funny because I remember looking at a chart for silver way back in, I think it was 2021. It was like, I felt that $22.50 is a good place to enter. And we tanked below that level. I think it hit 21 last year. But anyway, silver won the day from 2022, believe it or not. Now it's time to talk a little bit of ugly news, everybody. And of course, I share it all so you can make your own decisions. So first of all, unfortunately, US tech layoffs are ramping up. We are now ahead of COVID-19 levels in Q2 2020. And you can see that that trend is going to continue. Red is the number of employees laid off on the left axis. And blue on the right is the number of companies with layoffs, about 450 right now in Q4, and expect that to increase as we go forward. That's one of the reasons we talk about kind of recession when it's going to hit. Typically, it's good for kind of employers to start hiring back before all the good employees are gone, if they are even laying people off in the first place. Anyway, it's a terrible situation. Let's talk about the Widowmaker. This is from, again, Arcane Research about ETH, etc., and the ETH versus ETH performance. And this is kind of stunning. So first of all, if you look at the chart, you'll see the ETH asset from Grayscale, their Ethereum trust, is down 69% since June 2020. If you look at ETH itself, it's up 380%. So how the heck is that even possible? Well, that's because they had such a huge margin added, not a discount like it is today. So it went from being very profitable, you were adding 30, 40, 50% on top of the value in the assets under management in the asset. And now it's gone to a full reversion to a huge discount. And that has hurt a lot of people. It's like a double whammy, going from paying a premium to now holding a discount as we go forward. And that gain is quite staggering. Another way to view this as well is this is the GBTC discount, which is currently trading at 45%. It's off the bottom, it's about 49 to net asset value, while the ETH with an E trades at 59% discount to net asset value. ETC, which is the Ethereum Classic, That is at 77%. So nobody's touching that one. Litecoin, 65%. And Bitcoin Cash, 57%. Bitcoin Cash is actually doing better than ETH, which is a head scratcher unto itself. Now, a lot of talk right now about kind of how a Reg M would cause a massive arbitrage selling in the crypto spot versus buying Grayscale Trust shares. And if this scenario plays out, the crypto market could face a little bit of downside as well. But over a longer time horizon, the market would finally get rid of the major burden that's holding a lot of things back. It's holding regulation back. It's holding the SEC back. And that is the Grayscale Widowmaker trade that is generated. So it's shaping up to become a potential market bottom event, fingers crossed. But what's interesting is these two guys. They are having at it in a public spat on Twitter. And since I last talked about DCG, more pressure has emerged. More recently, I think Cameron Winklevoss published an open letter to DCG CEO Barry Silbert, who runs DCG, which owns things like Grayscale, CoinDesk, etc. And he said that Barry has acted in a bad faith stall tactics, with Genesis owing Gemini Earn, which is a product from Gemini, which the Winklevoss brothers own, and they owe apparently $900 million. And the open letter concludes with Cameron seeking from Barry to publicly commit to cooperating and solving the problem by January 8th. And meanwhile, the letter did not disclose Gemini's intended path if Barry does not respond. But either way, there's apparently a coordination of an involuntary petition for DCG to Chapter 11. And in addition, I did mention as well in the past, I think Valkyrie Investments are kind of swimming around, as well as other potential acquisition targets for the Grayscale Bitcoin Trust and maybe some other trusts as well. So fingers crossed all this will be resolved in an amicable way, and it'll be beneficial for retail investors out there. In addition, final nugget of the day. This is from Lycion, and I think I shared it before, but I can't remember, but I want to stress it again, because someone challenged me on this number before. But if you add up the 0 to 1 year expiration of certain treasury debts and the 1 to 3 year group, these two add to 50%. So 50% of what's soon going to be $33 trillion is a massive amount of interest that needs to be paid by the US government on their debt as it rolls into something with a 4x handle. That would be at least, by my simple math, $650 billion just on this portion that's about to roll over into a new higher interest rate. And that almost equates the US defense budget, which I think is about $700 billion. So again, crazy times. But, you know, the Fed may want to do certain things, but the question is, what can they do without shooting their feet off altogether? And this is the quandary that I don't get. So the question is, what is the constraint mechanism? When will they turn? Many big money center banks, many top economists think that's coming very soon, as I covered as well yesterday. So with that, everybody, hope you enjoyed the show. Hope you learned a lot. Some good news, some bad news. Actually, more good news than anything else. And once again, happy birthday, Bitcoin. Thank you all for being here. Thank you, everybody in the chat. Love you all. You're fantastic. Bye.